Bitcoin is not digital gold, at least not right now, and that's exactly why people are confused. Stick around because by the end of this video, you'll understand exactly why gold is winning the moment, and I'll also provide you with my exact three-phase framework that explains where we're at in this cycle. So here's the uncomfortable question that no one really wants to ask right now. Why is gold ripping and Bitcoin is stuck in a consolidation phase? Bitcoin topped out near 125,000 and sold off hard to around 80,000. Now we're currently sitting around 87,000 as of today. We have shutdown risks that are back on the table, tariffs are being discussed again, and the dollar is losing value. And that's not what most people expect from a so-called store of value. And now Bitcoin is dead, again, for like the 7th time. So today, I want to slow down and provide a clean framework for what Bitcoin is actually doing and why gold is winning this moment. So a quick context before we dive in. If you're watching this, you're probably already crypto aware. You've likely used DeFi or at least understand how these markets work. This is not a beginner video, so I also assume that not everybody lives inside macro charts all day. So the goal here is clarity, not predictions, not price targets, and certainly not financial advice, just understanding. So let's start with reality. Bitcoin is in a macro consolidation phase after a very large expansion move. One thing we have to assume too as well is that Bitcoin is not a degen cyberpunk trade anymore. It's moving more and more like a macro asset, think gold or oil. We're not quite there yet, but as we have more institutions and central banks hold it as a store of value, that moves us closer and closer to that macro idea. We're coming off of a 35% retrace after a major cycle push, which is not unusual. But what is unusual is the expectation that people place on Bitcoin during this phase. People expected Bitcoin to act like gold immediately during rising macro stress, and that expectation is where most of the confusion actually begins. So gold is doing exactly what a mature reserve asset is supposed to be doing. When uncertainty rises, capital hides, and gold absorbs fear. This year alone, gold is massively outperforming Bitcoin in the short term, and that hasn't been a one-off. Tariffs, wars, shutdown risks, currency stress, gold keeps responding. That doesn't mean Bitcoin failed, it just means gold passed the test that Bitcoin wasn't built to pass yet. Gold has like a 6,000 year trust premium and Bitcoin is 17 years old, so that difference definitely matters. But here's the distinction that changes everything. Gold is a hedge and Bitcoin is still monetizing. Hedge assets protect capital during fear. Monetizing assets reprice after the system responds to that fear. That's exactly where we're at today. Gold moves first and then Bitcoin moves later, when liquidity returns and when policy clarity appears. Now later this year, we have the Clarity Act, so that's coming out. That should resolve in 2026, and that should definitely be bullish for cryptocurrencies. So when people say Bitcoin isn't digital gold, they're usually making a timing mistake, not a structural one. And there's another layer here that doesn't really get talked about. Bitcoin ownership has become heavily US centric. So think of like ETFs, public companies, institutions. These dominate marginal flows. That means when the United States is the source of the stress, and it has been as of lately, Bitcoin behaves more like a US risk asset than a globally neutral reserve asset. And that's not inherently bearish for Bitcoin, it's just part of the adoption phase. Every reserve asset in history started concentrated before it became neutral. Gold wasn't born global, it became global. What do I mean by this? So I don't mean people didn't value it everywhere, because they did. Gold was recognized across cultures very early, but it didn't function as a unified, standardized, global reserve asset from the start. That took empires, trade routes, commonwealths, banking systems, and eventually central banks. So gold was universal as a material long before it was global as a monetary system. And Bitcoin is going through the same process. It's just compressed into decades instead of centuries. There are also some long horizon questions that sovereign allocators actually care about, and I think this is important to mention. And we're going to do a deep dive in another video into these topics. We have security horizons, technology change, unknowns like quantum computing. That's a big one to talk about. But none of these break Bitcoin tomorrow. But if you're thinking in terms of 10 to 20 year windows, hesitation definitely matters. Gold doesn't need to upgrade, Bitcoin does. And that also doesn't make Bitcoin weak. It makes it early stage monetary technology. And it's Bitcoin's advantage because we can upgrade the network, unlike gold. So if we zoom out and ask the right question, not why isn't Bitcoin pumping, but instead, why would Bitcoin aggressively reprice before policy resolution, before liquidity response, before confidence returns? Right now, we're in fear without resolution. Historically, Bitcoin doesn't lead that phase. It leads what comes after. So here's a simple framework that I use, and it comes in 3 phases. Phase 1 is fear, and this is where gold is winning, and gold is certainly outperforming. We topped almost $5,600 today. We have Bitcoin failing the hedge test. We have macro headline risk dominating the narrative, and we have policy uncertainty still unresolved. So this feels to me more like a late phase 1, and there's a few tells in this. Fear is no longer shocking the system. We have shutdown risks, tariffs, wars, currency stress. None of this is new information anymore. Markets aren't panicking, they're fatigued. Late phase 1 is when bad news stops causing big sell-offs. Risk assets stop collapsing, but they don't rally, and gold keeps grinding higher quietly. And that's exactly what we're seeing with late phase 1. It's usually boring, frustrating, and narrative heavy. People are going to be arguing more than they're actually trading, and that's when gold keeps doing its job and Bitcoin looks broken to the tourists. During all that, smart money is preparing and accumulating as we're in this phase. This also leads us into phase 2, which is the resolution phase. This is when markets stabilize. So Bitcoin already flushed out from 125,000 down to 80,000. Leverage has been cleaned out and volatility is compressing. That's not a crisis. This is exactly where we need to be before a dramatic move up. That's compression after damage, and it's late phase 1 behavior. So what would signal a phase 2 resolution? You don't need to predict it, you just need to recognize it. So like phase 2 starts when shutdown risk resolve. So we're going into a shutdown currently at the end of this month, and eventually we'll resolve that. Trade uncertainty becomes known, and policy language shifts from threat to containment. And we're seeing that with the Clarity Act that should be coming out later in 2026. Bitcoin usually stabilizes before reflation begins. And the third phase is reflation. So that's when Bitcoin outperforms. Liquidity is going to be returning, risk assets reprice, and growth expectations rise. Now, what would confirm phase 3, which is reflation? You would have liquidity injections, rate cut expectations firm, and the dollar continues to weaken. That is when risk appetite will return. Bitcoin does not front run panic, it front runs liquidity. And we're not in phase 3 yet, and that's the mistake people keep making, expecting endgame behavior during mid-game conditions. So I don't think the Bitcoin thesis is dead. In regards to price targets, I think we're applying the right idea at the wrong time. Bitcoin is not digital gold today, it's becoming digital gold and monetizing alongside gold. That doesn't happen overnight. If you understand that distinction, you stop getting shaken out by narratives and start thinking in terms of cycles instead. If you like this video, then please share it with a friend. If you want our free DeFi Path playbook, it's linked below. You can also join our free DeFi Path beginners course, which is an introduction into the world of DeFi and how you can use it today to start earning real yield.